Good evening to everyone. I'm Christos, and today we're going to look at where we can put our money if we're not ready to invest yet, but don't want it losing value sitting in the bank. Yes, I know that banks have recently made a move to increase deposit interest rates, but once we dive into it together, you'll understand. Luckily for us, there's a much better alternative, and trust me, it suits everyone. Let's delve into the details together. I am not an investment or legal advisor. All opinions expressed in this video and on this channel in general are solely my own. They are meant to entertain you. Do not take investment or legal advice from a person on the internet. Always do your own research. For a while now, we've been hearing central banks continuously raising interest rates with the aim of combating inflation. What does this mean in simple terms? It means that money becomes more expensive, but not in the way we typically imagine. After all, 100 euros is still 100 euros regardless of inflation. What changes and makes money more costly is the borrowing cost. It's about the cost to secure liquidity, not the physical cash itself. Well, this cost increases as interest rates rise. To put it simply, if we take a loan of 100,000 euros with an interest rate of 2% for 1 year, then we get liquidity of 100,000 euros today and need to repay 102,000 euros in a year. So, the liquidity of our 100,000 euros cost us 2,000 euros. Now, if the interest rate goes up to 5%, the liquidity of 100,000 euros will cost us 5,000 euros. And that's how we understand what we mean when we say money becomes more expensive. So borrowing becomes less appealing, leading to less money circulating in the market, resulting in reduced demand and consequently lowered prices and inflation. Alright, that might have been a lot, but we get it. So far, so good. But there's another side to rising interest rates. Deposit rates, that is. You see, as money becomes pricier, it means that if we already have money to lend for liquidity to someone else, we will also be better compensated. When a central bank raises its rates, like the European Central Bank did, both borrowing and deposit rates increase accordingly. Maybe not by the same proportion, but they do increase. For a long time in Greek banks, we saw borrowing rates rising, meaning our loans cost us more, while deposit rates were nearly zero. Recently, after quite some time, banks have decided to raise their deposit interest rates, focusing particularly on term deposits while also offering additional investment options. Great news! Why the long face, Christos, you might ask now? Isn't it good that deposit interest rates are increasing? Well, it's good, but not the way it's done here in Greece. Luckily for us, there's a better option. We'll see it shortly. Let's first take things step by step. The four major Greek banks, National, Piraeus, Eurobank, and Alpha Bank, stated in a recent announcement regarding interest rates that banks individually and independently based on each bank's policy constantly adjust deposit and loan interest rates as determined by the European Central Bank and regularly review or even reduce fees for banking services in accordance with current European legislation and market competition conditions. And the joint statement continues, saying that Greek depositors are offered a range of options that combine security with noteworthy returns, considering the relevant decisions of the European Central Bank and the internal policies of each bank. For instance, the yields on time deposits with a duration of 6 months or longer have been on the rise in recent months, with rates for 12 months or more hovering above 1%, varying based on the bank and the deposit amount. Looking briefly at all four banks, interest rates for term deposits start at 1% and can reach up to 3% under certain conditions. And what conditions? Initially, these pertain to term deposits of 6, 12, and 24 months, meaning for money that's locked for the corresponding duration. Naturally, the longer the term deposit lasts, the higher the interest we receive. But that's not all. The minimum deposit amount. To benefit from the minimum rates, one needs to deposit at least 10,000 euros and lock it for 6 months. Thus, we'd get an interest rate close to 1.2% for the entire year. Note this because for the 6-month period, we'll receive half that amount, which is 0.6%. On the other hand, to maximize the interest offered by the banks, one would need to deposit an amount possibly even exceeding 200,000 euros, which we'd have to lock in for a full 24 months to achieve the coveted 3%. Hey banks, are you serious? You tried to do something right for once and yet you messed it up. Anyone with even basic money management knowledge wouldn't lock up their funds for such durations for such low returns. It's unthinkable. We'd lock our money for a guaranteed 5 and 6%. Of course. But should we lock in for 1 to 2%? Are you serious? So what do we do then, Christos? You might be wondering. Well, now comes the interesting part of today's video. You see, there's now an option that is tailored for the average person. Specifically someone who doesn't want to invest their money but wants to keep it somewhere safe while it earns interest. And it accrues daily interest. And has no exchange rate risk. and doesn't lock up our funds even for a day. As you've probably guessed, yes, I'm talking about the D account by Freedom24, which is now available in euros. Finally, the D account offers a stable return in euros. Specifically, it gives an annual yield of 2.5% with daily interest payments. I'll emphasize this, daily interest payments. Meaning, even if we transfer our funds for 2 weeks, we receive our due interest every day. There's no commitment. None at all commitment. The process, it's super easy. Register on Freedom24 through the link in the description for a free share. Go to member area, transfer between accounts, enter the amount, choose the D account, and that's it. Ladies and gents, that's it. Our euros will now earn interest daily at an annualized rate of 2.5%. It's worth noting at this point that if we transfer dollars into the D account, they earn a slightly better interest rate, 3%. So it's clear that Freedom24 is the best destination for anyone looking to get their finances in order, whether you're an investor or not. That's because if we're seasoned investors, we can earn an additional 2.5% on our uninvested funds while waiting for the right investment opportunity. But even if we don't want to invest in the stock market, say because we're afraid or think it's not the right time, we can still earn 2.5% interest with daily interest payouts. What about our money? Always available. Guys, always available. No term deposits, no obligations. We leave our money in the D account of Freedom24 to earn interest daily, and we can withdraw it whenever we want without losing any interest and with no penalties. Oh, and the best part? From the very first euro. Yes, you heard right, there's no minimum deposit amount. We can put in as much as we want. So there's no reason to keep our money in the bank. We transfer it to the D account of Freedom24 and receive the most passive and secure income of our lives every day. Another innovation by Freedom24, and it came at just the right time. As always, if my videos have helped you to get your finances in order and you want to start investing successfully, you can create your investment account through the links you will find in the description. This way you are sure that you are using a reliable platform and actively supporting this channel for free. Thank you so much for watching this video. I hope it helped, and I'll see you in the next one.